Is gold set to drop 10% back down to the $3,000 level? And will the S&P 500 rally 10 to 15% to a target of 7,200? Welcome to the Trading Pit, personal investing and trading tools for the active trader and investor. My name is Lundy Hill. I am a lifetime veteran of the commodities market. I was in the floor of the Chicago Board of Trade bond pit back in the 80s and the 90s. I've been a commodities broker and a commodity trading advisor since the early 1990s. This is not investment advice. I am not a financial advisor. Here are the charts I found interesting for the week ending July 25th, 2025. First up is the ES futures chart. I was a little concerned last week here about the no follow-through of this large cup and handle pattern that the S&P 500 has traced out over the course of 2025. We finally had a valid breakout. ES futures were up 1.4%, breaking the handle decisively. So I have a target of 7,200 on SPX, and I think that is still in play. I think the risk here is not being long enough, not having some leveraged S&P plays on. Of course, that's just for my own personal edification and for educational purposes only. Next, let's go to gold futures. Gold futures had a failed upside break. Here is the daily bar chart going back a few months. Note the upside break of that pennant pattern that we have. It broke out on Tuesday, and on Wednesday promptly turned around and had a bearish engulfing bar that sent prices down for the remainder of last week. The lower trend line is a major support area. Note the 4 touch points, with this latest move being the 5th touch point. Maybe it might be the breakout. Here it is zoomed in. I think gold is at a major inflection point here. It's got to hold. If it doesn't hold, I've got a downside target. Here I've highlighted the width of this pennant pattern, and the narrow width puts a price target down at 3150 on gold, and the wider number 2 puts the price target down below 3,000. So that would be a very key level to break here, and that's $400 lower. A couple of things that could send gold lower would be a strong dollar or the trade tariffs and decreasing geopolitical tension if you found some peace in the Middle East or other hot spots in the area. But I think the key takeaway here is a strong dollar, which hinges on what the Fed does in this coming week. Next, we have silver futures along the same lines. The mean reversion play I highlighted here last week really played out nicely, delivering gains of almost $2 on silver futures, and that depends, of course, on your entry and your exit. You note the exit made a new pivot high, but it had a narrow spinning top. Note the narrowing of the ranges as you make an up move. That is very indicative of sellers coming in and a top. Here it is zoomed in a little bit. Market structure, though, is still bullish. You're making higher highs and higher pivot lows. And technically, right now, we are in a mean reversion. You've had 2 down closes, but I would be very apprehensive about taking any position here in front of the Fed meeting, and also the expansion bar you had on Friday. Note that the expansion bar did find support at the high of that previous pivot low bar. I've labeled that 1. A side note here is that COMEX reports its silver holdings are at record lows of only 155 million ounces. Could we have another run on the COMEX silver exchange like we had a few years ago? Only time will tell. Next, let's go to crude oil. Here is the daily bar chart of crude oil, and it had a confirmed trend line break this past week. It actually broke out 2 weeks ago, but it didn't have much follow through. This week, again, we had follow through down. Note the 6 touch points that I've labeled of this upsloping trend line. So that gives validity to this breakout, and prices have dropped 2% since the breakout. Here I've highlighted the dramatic June sell-off. And after such a dramatic sell-off, you got to expect lower prices. Note that the pullback over the weeks following the sell-off only rallied up to the Fibonacci 38% level. This tells you that there's probably a 2 out of 3 chance that new move lows will be made. So I'm betting that crude oil goes down even farther. And I've highlighted some targets here. A Fibonacci 62% wave projection puts a price target of $61.32 on crude oil. If we get a full 100% wave target, that carries crude oil prices down all the way to $56.20. Again, several factors could send crude oil lower, primarily being increased OPEC production. But again, you've got stronger U.S. dollar policy, which again ties into the Federal Reserve meeting this coming up week. So another market that's going to really hinge on what the Fed does this week. Next, here's copper. Speaking of tariffs, copper had a major move a couple of weeks ago from Trump's tariff announcement, and then it pulled back right to the Fibonacci 50% point at $5.43 a pound. And then last week I noted that copper had my pattern number 5 and my pattern number 7, which were trend up signals. So I called for an immediate rally to test the highs of copper. And that's exactly what happened. So that's a win. Here is a zoomed in version of the highs. If you note these upside tails on Wednesdays and Thursdays price action, and they're also wider range up bars, that tells me that a large amount of buying came in, but all that buying was met with equal or greater, actually, amount of selling to send prices down. And actually Thursday had a classic clear out pattern where it made a higher high, it opened higher, had a higher high above the major pivot high of a few weeks ago, fell all the way back down, not only below Thursday's open, but also below Wednesday's close. And that forecasted lower prices on Friday, and that's exactly what happened. Of course, copper right now is setting up a 2-bar mean reversion play for a long in this coming up week. But again, with the FOMC meeting, I would be very apprehensive about taking a trade, too heavy of a trade here. And again, other factors could be the more tariff announcements or a pullback of the tariff announcements. And then also note the market dynamics about the front loading of copper inventories, that a lot of people have been buying copper ahead of the proposed tariffs coming into play. If the tariffs are pulled back, people could sell off their copper. Finally, let's look at Ethereum. Here is the daily bar chart of Ethereum. Last week I noted Ethereum has rallied to higher move highs since last week. You have to note that Ethereum is on a 7-day market as opposed to futures markets, which are on a 5-day-a-week pattern. Ethereum trades 7 days a week. Last week I noted that I believe Ethereum is due to reach its all-time high. That would be a move above $4,800 per Ethereum, and that's $1,000 higher from here, or a 25% move. Note the mean reversion play of a few days ago. You have 2 down days, and then you have another clear out bar up 2 bars ago, telling you that you've got higher prices. The rally, and here I've highlighted the rally from mid-July, and you note that the pullback to this rally went again right to the Fibonacci 38%. So that, again, that tells me that Ethereum has a 2 out of 3 chance of making higher move highs in the coming up weeks. You also have a potential for a foreclose reversal. That's my pattern number 5 that I will be on the alert for to go long here. Here is my wave projection. Ethereum is traced out. This could be the 5th wave up. The first wave is in red, and the 3rd wave of the Elliott wave 5-wave pattern is in green. So if you have a wave projection of the red, the wave 1, that has a target of on Ethereum of just under 4,100. But a wider wave 3 projection puts prices at around 4,500 per Ethereum. Thanks for watching. I hope you enjoyed this. If you got value out of this, please like and subscribe. If you have some comments, please leave those. I try to address all comments. Thanks, and have a good day.